All right, here we are on the Euro Yen trying to find another opportunity. I can probably go short and will explain to you the reason why. Now, based on this information, I'm on a 5-minute chart. Let me go to the 50-minute, 30 minutes, and 1 hour. This is definitely quite difficult, so let's just go back here to the 5-minute and address what would be the best scenario and opportunity for us to validate a sell setup here and how far will they go. First of all, I'm going to use today the synergy zone to plot where my stop loss should be. Now, it's very difficult and different today for you to understand it, but I just want to show you all the aspect of the benefits of understanding the synergy zones. I'm on a 5-minute chart, and I just happen to short the market just because. I didn't wait for a pullback or nothing like that. This might happen to many of you usually when typically you feel comfortable with the trade, but quite honestly can find yourself yet into the discipline of waiting. You just want to go short. Fine. Where should we place our stop? All right. Based on the information provided, our analysis states that we should place our stop initially in those levels until this low it's been taken. Okay. Now all we need to do is use this information, whatever we have left, to identify where the most likely tendency of win is here. As that stage, I can come up with the targets in a moment, but as usually, I like to go with at least 10 ticks, meaning that 24 will provide me with a 10 tick profit in this case. So I'm going to use that for now, and I'm going to calculate the potential forecast of where most likely the market will go. All right, here we go, and let me zoom in. I'm onto a 1-minute chart, and here we go. Based on the information, I knew that my stop should be placed on that area. Okay, I make the right decision by shorting the market just because we got our own criteria. We're going to teach you how to do it as well. But most likely, I have already calculated the potential move and targets on this Euro Yen trade towards the downside. And that would mean that at least the market is going to reach that 38.21 level as a potential target. If you can see, as we speak, we're pretty much closing by on those levels. And we're pretty much almost the full 10 ticks or 10 pips that we're looking for. Back into the 5-minute chart. We clearly see here the potential there. So it's just a matter of giving it a little bit of space because I know the market is going to go through my my limit, and fill me out on the first target, which is, as a coincidence, the visiting of the previous low here. All right. So nevertheless, should we protect our capital here or not? Well, I'm going to let it go, but I'm going to move my stop to the previous pivot high right there. So there's no need for me to risk that much. I know we're already on the profits, so I'm going to give it a shot and see how that goes. All right, so now here we are on the E-mini S&P. I'm going to feel comfortable taking a short position here. And as usual, I just took a position on a breakout strategy. That's very difficult. Many people tend to use this. But now the question would be, okay, can you identify then how long they will go? That depends on your daily objective. If you have your own profile and plan of action on a daily basis, which in my case is to at least make 2 points, when I can certainly go and try to go for the 930 something, which is 2 points from the 1139 that I have. So we're pretty much into 2 points difference in this level. Let's see if that happens. Now, but let me analyze whatever I have in this chart. I'm on a 30-minute chart, and address where the target most likely will be on the downside. All right, here we go. And based on our criteria of analysis, let me take this out of the way. We don't need those. We definitely understand that as a coincidence, let me just zoom in back into 5-minute. We have a target at 924, which in coincidence is pretty close to the 2 points that I'm looking for on the downside. So I'm pretty confident that this target will be reached. The next, I have 2 targets close to each other, which most likely it will be the next upcoming movement on the remaining indecisions on the ES. So if I'm position trading, I definitely can take my stop, place it on top of the pivot high, and let it go and try to aim for the lower parts of the target. That depends on the type of trader that you are. So I'm going to let this go and see how the results of this one comes by. All right, we're back into our trade on the euro yen. As you can see, we're profitable in this one already. So it's just going to make sense for me to move my stop to the pivot high. And guess what, guys? This is a free positive trade on our side. We clarified our entry point, right? Now we manage our trade accordingly, so I'm not taking any risk. And the reason I'm trading on the 5-minute is because I keep getting a lot of people asking me about how to trade on a lower time frame. I just got out of this trade with a profit, even though that the target were not reached. I understood that the probability of me shorting at that moment, based on the pivot step entry, in this case it would be something like this. That was the reason I just went short. That was a target on its way down. I managed it accordingly. I did not took the complete probably 10 ticks or whatnot, but I simply took 6, so that really doesn't affect. Still, I'm going to come back and see if we nail the trend with the targets in a couple of minutes, so you can validate that having not only the power of the knowledge of the synergy zone to enter the market, you can also use it to gauge the probability of potential reversal points. And if you enter a trade just because you made a mistake or you felt comfortable with the hunch, you can add up this information on the top of it on the bigger time frames and address the fact that, yes, I'm feeling confident of taking this trade because they're supposed to go on these levels on a bigger time frame. That mindset will help you sustain clarity in your trade and make sure that you make the nice judgment and don't trade emotionally, meaning if the market goes against you, you already know where the stop should be based on the analysis. So you let the market breathe and contract and definitely move its way up until the targets are reached, because you're doing the most clear path of analysis into it. This is the power of what you're going to be learning inside the inner circle. So this was a great trade setup. I'm going to come back into it in a little bit just to make sure that our targets are reached. And from that point on, I'm going to be calling it the day on this one. So let's just keep looking for other opportunities. While the last trade evolves on the ES, I'm going to show you a couple of people asking me, hey Carlos, what was the result of the Apple day trade that you did? If you remember, you can probably see the previous video when I explained the Apple at the beginning of the last live trade that I did. I'm position trading more Apple than not because I don't like day trading it. But nevertheless, here's how it looked, the results. Just make sure to watch the video below if it's accessible to you. And check how we nailed the potential reversal on the Apple at that day. And I told you that we placed a floating order at 127.22, which was triggered in this area. Once that happens, the first potential target was 27.51 and even potentially 27.66. Take a look how we nailed the 27.51 on a 5-minute trade on Apple. This is the power of trading power of trading equity trades, right? Stocks. If you're placing options on stocks or short selling stock, there's just a lot of information you could have used in this area. Now, the cool thing about this is that you have the knowledge and the power to do so. Now, take a look at this. If we understood that the most likely tendency for the market to come, we're on a brand new lows. We took a buy against the zone, and we know exactly the market will go to either one of these two targets. They're actually translated into resistance levels. Now, after that, I already had a pivot step in place, meaning this is based on price action. If they sustain a downward move, that would accrue into the short position, placing your stop on the pivot high in that level on Apple, and you probably would have let it go. Based on the information that we have, in this case, it's the exact same target area or zone. I could use that as the actual, you probably guessed it, target prices. If you did that, take a look how the market actually went through it, and it's just bouncing off that zone really for the first time. And this is the power of understanding how to use the synergy zone. This is the result of the Apple trade. That was a quick buy against the fade of the zone. We were able to manage and call up that target. And I'm just explaining to you how to continue trading this on and on and on. Once you have one zone in place, so basically you go to a bigger time frame, calculate the potential zones in it, and then trade your way from it on smaller time frames. I don't like to do it, but there you go. That's a way for you to take a look at it. On the bigger time scale, I'm looking for a continuation of a downward move. I got bigger swing trades towards the downside that I'm probably gonna as soon as they develop, because they're based on daily charts. The market hasn't moved in the last couple of days, so probably it's going to take longer than expected. But at least we have the closer view on a shorter period of time, how everything exactly works. The same on any equity, futures, market, commodities, currency, you name it. You can actually apply this information in any way. Okay? All right, here we go. And I find an opportunity here on the oil market. So I am going to place a buy very clearly based on the pivot step breakout. Today I'm not even using the pivot step. I'm not even using the synergy zone to get into the trades. I'm taking breakout trades, which is the worst fill ever that you might have. And the reason that I'm using this type of scenario is to show you how you can trade effectively with this information. I'm on a 5-minute chart. If you notice, this is all I got. There's no much information that I can get from here. Nevertheless, what I'm going to try to find out is how far up they'll go on the oil. Nevertheless, in this case, I usually try to go for at least 10 ticks. That will put me on the 31 right there that you're looking at, and that will give me 10 ticks or profits, which is my daily objective on every trade that I take, minimum on oil. Let's just try to find out, first of all, where else will they probably go to the upper side? Meaning, if the next resistance points are beyond my 10 ticks, I feel comfortable holding this trade and keeping this stop what it is. Okay? Let's just find out. All right, here we go. And I just found out that the next upcoming potential resistance point will be 61.40 for oil. Can you notice that my exit based on my daily objective is just way below that resistance area or seller pressure area? That means that I can hold this trade, and for sure I should get my 10 ticks. It's just a matter of me being patient enough and hold this trade accordingly. Now, I even have further target of 62.02. So if I'm a position trader like we usually are, I'm pretty sure. Notice here that I might have a potential of over 80 points or $800 on oil left. That depends if I'm this type of trader that I have enough capital to sustain this trade and manage the trade accordingly on its way up. Okay, so basically what we're going to do is just going to sit back here and wait until we get at least our 10 ticks on this trade. Alright, we're back on my ES trade. The market bounced from it. Remember, I took the worst fill ever. So that's the type of trading that I'm doing today, like the worst fills. And I need to use this information. I'm saying, okay, I screwed up. I got emotional and I got into this trade. What can I do in order to limit my risk, but still give it enough space for the market to work itself up? I need to address, okay, based on this information, where should I place my stop? Well, the most important logical way for me to do so is on the triple top formation right there. But based on the inner circle information, I can even use this as a potential stop above and beyond this zone. I noticed on price action activity that this important high, it's close enough to this guy right there. I'm going to move it a little tick, one tick above that level, and boom, I'm already protected. Also, with information that I know how to apply in this scenario, I can address that 2109.24 and 2108.91 are the most logical protection next level of support. And you're going to learn how to do this constantly. Obviously, it's going to take a while, but this is basically what I found out. Meaning I can hold this trade, no issue whatsoever. And once we take this low right here, I will immediately address my risk and move it on the pivot high. I'm using price action to do that. So even though that I screwed up on the worst fill ever, I'm pretty sure that I'm managing correctly, which is the most important thing. Keeping me out of emotions and understanding that I'm doing my best in terms of the trades that I'm actually taking. So let's just wait here, pause the video, and see the results, whether we get stopped out. If I see the break below this level, I'm going to move my stop to this level high, but I'm targeting at least my 2 points, which in coincidence is close enough to the next two upcoming support levels. Alright guys, we're back, and as you can see, we got the oil trade already hit our target as expected. We missed the top of the line, but you clearly see that we cleared out. This was pretty awesome. So we nailed that. I mean, I'm gonna say 60-40, and the market reached what? 39. Are we gonna complain about that? No. You see, even if we take a breakout strategy, just like you saw, by having the right path of information, you can clearly see how much points left do you have in this trade. So pretty much give you the gauge of, you know what, I can hold this trade because this is what's going to happen. On oil, I still have a potential continuation of an upward movement, so I'm going to leave it as it is. Sweep back to 50-minute and see what happens. But clearly, I think we did great decision in this second trade. So the first trade was in euro yen, worked out perfectly. We got our 10 ticks. And oil, we got our 10 ticks, a little bit more than that as predicted. And now we're sitting duck waiting for the ES to work its way on. All right, we're back on the E-mini S&P. We notice our stop is still intact. I'm on a 15-minute chart as we speak. We notice the market hasn't moved that much. Came up, retest the exact entry that we took, but quite honestly, they're just plain and simple not moving as we're expecting them to do for quite a while. Nevertheless, what I'm going to do, I'm going to manage my stop accordingly. The reason being is the market is not moving as I really wanted it to, so I'm going to choose the top of the zone in this case. I mean the bottom part of the zone, which is the high of this bar, 15-minute bar. I'm going to let it go. In this case, I just immediately minimize the exposure of my loss in here with only about 2.5 points. And I'm not going to let it be. You see, so I am managing my trades accordingly based on price action now. There's no need for me to leave the stop where it was if I have the opportunity, based on what I'm being able to read on the market, to minimize the impact of my losses in the correct way. So still bearish, still the targets are in place. All I have to do is just either get stopped out or the market will provide us with the profit that we're looking for. Alright, in the meantime, I'm going to pause the video and bring back the results. Alright guys, as you can see, we've been stopped out of this trade. And that's it for now. I don't feel comfortable taking any of the trades. We tried it, and not everything is perfect. But the truth be told is we manage the trade accordingly. Number 2, we enter on a breakout on the worst case scenario ever, but we use the information to gauge exactly what to expect from the market. You notice how I use, let me drop down to 5 minutes. You notice how I use price action to validate where most likely I should lower my stop accordingly. So that way I'm not 100% attaching to financial losses based on how much I'm losing or making. Just price action is telling me when to get in or out of the trade. And that's basically it. Nevertheless, once again, we were able to manage a great trade setup on oil and a great trade setup on the euro yen, if you notice. And this is part of trading live here on the good, the bad, and the ugly. Based on the information that you're going to acquire on the inner circle, it doesn't matter how you apply it. It's going to give you the edge that you're looking for on your trading, and the competitive advantage that many other traders, which falls into the 10%. I mean the 90% that usually lose 90% of their capital within 90 days. And that's the most important thing so far. All right, so this is Carlos. I'll see you on the next video.